Welcome to the B.F. Anderson Technical Report for May the 10th. You know, I always recommend to people that are interested in their portfolios, retirement, etc., to read books. There's some great books out there, and one of my favorites is a book written back in the 1950s by Nicholas Darvis. Nicholas Darvis was a professional dancer like a Fred Astaire back before, back when we had black and white TV, I guess would be the way to explain it. And $2 million back in the 1950s, I mean, you were like a Warren Buffett if you made that kind of money. His sister, Julia, would dance with him. They'd do these dance routines, and they would go all around the world doing these routines. But anyway, the book is an interesting book. It's a weekend read. It's a very easy read. It's a thin book. Get through it in a weekend. But the main thing is, it's an adventure story. It's about a guy that starts out with basically nothing, makes all the mistakes that you could possibly want to make. Makes all the mistakes, and then he starts to understand the right way to do things through trial and error is basically what the book is about. But one of the things he discovered, and I think is very appropriate for where we are today, and I'm going to read this. It says, "I did suspect one thing, however, and that was that the leaders in the previous market would probably not lead again. I felt sure that they had fulfilled their place in history, and they would not, for the time being, reach the same dizzy heights that had brought so much money to the investors who had followed them. I had to find new ones. Later, this was proven right because hidden away in the market quotes during the period were some stocks which were apparently of not much interest to anybody at that time, November 1957. They were certainly of no interest to me. I had hardly heard of them." So as the market goes through these corrections, you have to really kind of think about where the rubber meets the road here. What is causing this? What is causing this correction? Well, I think it's a changing of the guard. I think it's where certain leadership stocks or leadership investments in the market, they just basically run out of steam. It's almost like they're pushing on a string. Now, I'm not going to pick on Apple, but I mean, how many more iPhones can Apple sell? Let's pick on Boeing. How many more planes can Boeing sell? It kind of gets to a point where you have to think about it. These companies start pushing on a string, and it's just something to think about. So let me bring you to the first chart here, and this is really where I'm trying to take you. This is the S&P 600 Small Cap Fund. This is small companies. Small stocks are outperforming the large indexes, and I'm going to show you this. This index, as of yesterday, hit an all-time new high, when the rest of the market really isn't doing that. We follow 5 indexes. This is the only index of the 5 that we follow that is hitting an all-time new high. So this is wonderful news, because what it means is that if the economy is getting strong enough, and we're going to talk about that real briefly here, but if the economy is getting strong enough where investors have enough confidence to start investing in small companies, I'm talking about companies around $10 billion. I mean, the ones that have been leading the market for the last, say 3 or 4 years are, $800 billion. I don't see how you come out on that, is my point. So if you notice here, we have this triangle formation. The index is broken out clearly above the moving averages. The moving averages have turned up. We've actually got a golden cross. Now let's jump to the large caps, which is the S&P 500. Now, a move above 2,700 on this index, I think, will be meaningful. And then likewise, if it breaks down below 2,580, that could be meaningful. But it looks like to me, as of yesterday, we're breaking out to the upside out of this wedge formation. So compare this index with the small caps. You can see a dramatic difference. I mean, you're not getting the golden cross. The index has turned, the moving average has turned up, but it hasn't crossed. Whereas on the small caps, it has. This is very good news. Now, I would say another way to kind of get a feel for what's going on economically, keep an eye on stocks like this, Federal Express. Now, you can see it's still just like the S&P 500. It's caught up in this wedge formation, just like just about everything out there. But I would keep an eye on FedEx, and if it were to break out above 255, that would be a very positive sign. Now, let's take a look at a little bit of an education here on long-term analysis. This is the S&P 500 large cap index. I've got the index posted here on a monthly basis. This is the closing value of the index on a monthly basis going back to 1993, and then I terminate right at the end of 2000. Now, what I'm trying to point out here is that you get into these corrections like 93 and 94. That was a really difficult period. You couldn't make any money. It was just a trendless market. Well, sure enough, we went through a consolidation period, difficult year. Now it's followed by an easy year. 1995 was an easy year and a good year. Then we got into 96. The first half was difficult. But then starting in 97, boom, major bull market. We had one fairly serious correction in there in 1998, but then we went on up to 2000, and it looks like to me that we're starting to see the indexes, the trend is starting to wane, it's starting to end. So let's go ahead and carry it forward to 2001 just to see what I'm trying to say. Easy, difficult period, easy period. Easy period, easy period, easy period. Very difficult period. You get the cross on the same moving averages. Now, this is the 10-month moving average versus the 20-month moving average. And you can see the death cross, and you can see that the market is turning down, and it went into a very dire bull market, very serious bull market, dropped dramatically. So where are we today? This doesn't look anything like this. It doesn't look anything like this. We are currently in a very nice, steady uptrend in the monthly moving averages. Now, I learned about the 10-20. We call it the 10-20, 10-month versus 20-month. This was back tested by Louise Yamada. I've talked about her in the past. She's a very smart technical analyst. And she said one of the big problems that people have is they don't look at monthly charts. They only look at daily charts or short-term charts. But you got to step back sometimes. And what this would say is that the bull market actually started, a new bull market started in July of 16. And that was about the time that Brexit was analyzed. And so the question is this the beginning of a 5-year bull market like we had in 95? I don't know, but it looks similar. The other stock that I would say other than Federal Express, and I thought this was interesting, this is Ferrari. These are cars that cost $250,000. Race cars, personal cars. That stock has broken out. They announced earnings. Now, if the economy or the worldwide economy was bad, I don't think a lot of people would be buying Ferraris. So let's get into the top 5. Here is Axon Enterprises. This is the old Taser. I don't know if y'all remember, don't tase me, bro. But it's the Taser. This is the old Taser company. Last Friday, they merged with their largest competitor. And they're getting very involved in video cameras that are cloud-based. So in other words, the police officer doesn't need to turn in a hard disk or whatever to the IT people. It's all run by his iPhone with an app. So this is a very interesting company. I must admit, our firm owns this stock. Our clients own this stock. They came out and announced earnings 2 days ago, and the stock jumped 22% one day. So this is really looking like a winner. So you might want to keep an eye on Axon Enterprises. Price of oil seems to be moving up. Question is, will the price stick? We're at $71 a barrel. This Iranian thing is going to cause about 500,000 barrels a day to come off the market. But the thing to realize is those frackers out in the Permian Basin, this is really good for them. So Continental Resources, this is an oil and gas stock, just broke out to an all-time new high. All right, here's an old favorite, kind of a turnaround situation. Chipotle Mexican Grill, restaurant chain, got in trouble. Now they seem to be coming out of it. Next, we're back on Netflix. Netflix looks really good, very popular service. Here's a financial stock, SVB Financial, new highs. So in conclusion, what I'm saying is the guard is changing. The small caps are starting to lead, and I'm going to tell you, this is the first time the small caps have led since '09. Because realize now, we went through that '08 depression #2, and as we came out of that depression, the big stocks, meaning the toothpaste stocks, the utilities, the banks and so forth, pretty much led the way because of, really lack of confidence. So as the economy has gradually improved and the cycle has continued to unfold, we're now seeing that the small cap stocks are taking a leadership position. And my friends, that's where the real money's made. So if you have any questions, let me know. Thank you very much.